I've been trading for 5 years now, and during that period, I've received over $100,000 in prop firm payouts, and I've also reached 7 figures in total prop firm capital. And at the moment, I'm hoping to increase my prop firm portfolio. The trouble is that right now, I'm in the biggest losing streak of my whole career, and I've decided that this is the perfect time to record a series like this one where I'm going to be sharing every trade that I take live with you guys. So we're gonna try to pass a $100,000 5%ers high stakes challenge. And the reason that I've gone for 5%ers for this series is because they're probably the most reliable prop firm in the space right now. They've got the best spreads, really competitive pricing, and I've actually received over $7,000 in payouts from them in the past as well, so I trust that they're going to pay me out. If you're interested in doing your own 5%ers challenge alongside me, I'll put a link to their website down in the description below. I'm a swing trader, so I don't take that many positions, and for that reason, this is going to be a monthly series, and each episode is basically just going to show me going through my trades. We'll review them, see if there are any improvements that we can make, and then we'll take a look at the dashboard and we'll check out our progress, and hopefully it's going well. I've gone ahead and purchased the high stakes challenge already. So you know the criteria. There's a 10% max drawdown, there's a 8% phase 1 profit target and a 5% phase 2 profit target. So because of the 10% max drawdown, I'm going to be risking 1% risk per trade, which leaves us with 10 trades before we blow the account. This month is March, so we're going to be starting off in March, and I've taken 2 trades so far. So let's review them. Let's get into the charts. Come on. So the first trade I took this month was a continuation on AUD/USD, and this one was pretty brutal because I had to wake up at 2 o'clock in the morning to set my pending order. It can be worth it sometimes. In this case, not so much, but we'll get into that. So the first thing I always do when I review a trade is I look at the prior price action, and the prior price action here is really nice. Looking back, we've got this clean descending channel. We did turn into quite a messy range around here, but I'm not going to put too much weight on that because we had this really clear established trend out of it. So larger scale, I'm kind of seeing price action like this. So we've got this descending, we've got this range, but we've moved past it with an established trend, and there is clear momentum in these bullish legs. There's a few other things in prior price action that you could argue increases the probability of this trade. I mean, obviously there's the descending channel, but also we've got these V's. And when you see a lot of V's like this, I mean, you could say that's a V, but mainly these two here. When you have V's in the direction of your trade, that's normally a good sign in my opinion. So looking at the legs of momentum now, you can see that there's a lot of strength to the upside, especially in these later candles. We've got 2 candle breaks with really good closes, no shift in the pullbacks, really small pullbacks is a good sign. And you can see here, we continued again with strength. We broke the high and we didn't retrace. We continued with momentum. One thing that may have put some people off of this trade, and it's actually the only thing that I've kind of marked down on this trade. It's the only reason it's not a 10 out of 10 for me. And it's because of the pullback in this continuation. It's quite a medium pullback. I think this would be a better trade if the pullback was just 1 or 2 candles. So despite this medium pullback, I was happy to take a continuation here because this break was just so good. If I take it back right here, I would have been looking for a flag, but based on the medium pullback, I was thinking, right, I will take a continuation here on the condition that it's a really strong break. I need to make sure that momentum's continuing, because if we just got a weak little break here and then a retrace to my entry, well, now I'm starting to think maybe we're ascending. So it was quite important that I got a really strong candle on the break, and that's exactly what we got. So I set my pending order 1 pip above this most recent high here. Would have caught a lot of people out actually. I'm sure a lot of people would have set their order here, but the most recent high is technically on the top of this bullish candle here. So I set my pending order at 1:55 a.m. I was tagged in, thank God, and then I was able to go back to sleep, and I left my trade to run overnight. Unfortunately, this did end up in a 1% loss, I believe. Let's see. Yep. So we ranged around until London Open, and we were just tagged out then. What was the outcome of this trade? Looks like we just ranged around some more. So yeah, I was really happy with that trade. It was a 1% loss and I gave it a 9 out of 10 just based on that medium pullback. So the next trade I took in March was also on AU, and this was on March 18th. And this was a really clean flag. I think I actually ended up giving this a 10 out of 10. There was no warning signs big enough for me to mark this down. Prior price action, it's range bound, and I'm fully aware of that. But I was putting so much weight on this impulse out. This is prior price action for me. We've left that range behind, and the range is kind of irrelevant, to be honest, because this impulse is just so good and so large. I mean, look at this leg here. There's not a single counter trend candle. So I really, really liked this leg of momentum. One thing you could mark down from this trade is the little ascending here. We have seen in the past that AU doesn't like to continue from these kind of scenarios. So an ascending, a push up, and then a flag or a continuation. In my opinion, this ascending was just way too small, not that important, and we'd pushed so far out of it with an established trend. Like, it wasn't just one impulse. I wouldn't have taken a trade here, for example, because we're still kind of within a range, ascending, tiny impulse. But this one, we actually had an established trend. So we had a push up, a pullback, and another push up. So for me, a lot of the prior price action here is irrelevant. A few people didn't take this trade because they saw a shift in momentum, which I thought was quite interesting, because if you compare the size of these candles compared to all of the candles in this push up, I mean, it just doesn't even come close. Even when you have 3 in a row like we have here, these candles don't show a shift for me. We're actually struggling to break lower, whereas these candles are breaking higher and continuing. I guess you could say that there's a soft shift in this candle, but that's purely based on the solid close. The candle itself, the body of the candle, is relatively small in the context of the impulse. Another reason that people may not have liked the look of this trade, and I'm just being really picky here, I'm trying to give you a cover all so you can really get in my thought process. So right here, the entry candle is relatively small. And that might have put people off because it might not have shown a lot of conviction, a lot of strength to the upside. And I get that if you're seeing these as shifts as well. But for me, this is actually kind of a good thing, because if we break the high with my trailing stop loss management system, I get to immediately reduce my risk below this candle. And then like 80%, 90% of my risk is off the table. Say the entry candle formed up here, I'd still probably take the trade. But you can imagine you would only be able to reduce your risk to like 0.7%. So this is just generally a better situation in my opinion. So yeah, we broke the low with this candle and immediately retraced. So we got an immediate reaction as we broke the flag low. What happened with this trade? Let's see. Another 1% loss. So it just happens, unfortunately. I mean, I already said at the beginning of the video, I'm in the biggest losing streak I've had in my whole trading career. But honestly, to give you a review here, I'm not concerned in the slightest. I've seen these losing streaks before in my backtesting, and I'm very confident in my system. So all I've got to do is follow my plan. The results of individual trades don't really matter too much. Sure, you know, you can make adjustments if you start having really big bits of losses, but I'm not personally doing anything wrong in my trading. I've got a big edge researched over many years of backtesting, so to change that now because I'm feeling discomfort or, you know, uncertain would actually be harming the strategy. So sometimes the best thing to do is not to think about it too much and just to keep following your plan and trust in your system. And that's what I'm depending on at the moment. So that is the review of these two trades. Let's take a look at the Fivers dashboard. So here we are on the Fivers dashboard now, and you can see that we are down $2,000, which is reflective of the negative 2% from those two 1% losses. So we've got $8,000 left, or 8% left worth of trades before we blow the account. One thing to look out for on these high stakes accounts is that they do have a news rule. So you can't open trades 2 minutes before or 2 minutes after news. You can hold trades through news, which is what I really like. You can close trades during news. You just can't open trades around news. Another thing to look out for if you're a swing trader like me is the inactive days. You should get an email saying that, you know, your account will close if you don't take a trade. So what I'll do is if I haven't had a trade in the next 15 days, I'll just place a 0.01 lot trade on EU, and I quite enjoy doing that. Maybe I'll make a couple pennies. But yeah, you can see there's not a huge amount to look at yet on the dashboard. But as we take more and more trades over the next few months, and as this series progresses, I'm sure this will be quite a lot of fun to review. So thank you very much for tuning in. Again, if you want to do this challenge with me, I'll put a link in the description. If you want to show me that you made it to the end of this video, comment with this emoji, and I'll see you next month.